Good afternoon and welcome to the end of day review for today. And today is Tuesday, the second trading day of this week. And this week we have a full 5 trading day. The week last week we did not only have 4 days because of the July the 4th here in the US. And this week is a CPI week, which is released on the second Thursday of the month. And then after that, on Friday, we have a PPI data. So the CPI data is for consumer, and the PPI data is for producer, manufacturer, and services provider right there. One is for consumer, the other one for provider. So that's two kind of data set we're gonna have. So it's gonna be a huge impact for this week. Already we have today, we see that the huge impact on the market is based on the statement made by Jerome Powell, is the Fed chairman. And let's see what other statement he's gonna make. Basically, the statement that he make is the Fed cannot keep the interest high too long because that could be negative impact the economy. So that's maybe cut rate in the horizon. So let's see how the markets react for the next 2-3 days. It's very critical. Today we see it's very range day, it's very volatile. The volatility is way hard to trade. We can see that, and we are in the week 28, so it's second week of this month, and also the second week of this third quarter right here. And CPI come out on July 11, Thursday. And then after that, the week after that, we will have the GDP data, July 26, and then we have a PCA data, which is the inflation data. It's pretty much it's like a PCI data, but it's just a more subset of the PCI data. It's called PCE data. And then a week after that, the last Tuesday and Wednesday of the month is gonna be the Fed meeting like that. So if we look at the calendar option, so that's the whole month we have right there. So we have the CPI and PPI come out the second Thursday and Friday of the month. And then we have excuse us, we put in the wrong box, wrong month right here. So the CPI data second Thursday and Friday. And then we have the GDP data and PCA data the last Thursday and Friday of the month. And then we have the FOMC meeting, which is the last Tuesday and Wednesday of the month. That's how the economic cycle or calendars impact our trading. That's the reason why we have to pay attention so we know when the market gonna move. So that's the whole idea, that we need to review this every day, get into our subconcept level. So when we trade, we have to be mindful that in which context we are in, and that's if we try the price or the movement or the volatilities in the market right there. All right, for today, we're gonna see, around 10 We look right here at just row 10s, boom, row 10, you see that, boom, the market volatile right there. So the first 2 candle, it is set up for sell off, boom, boom, the next 2 candle is sell off. And look at this reversal. It's very crazy. All right, before we go into the markets, look, here's the recording. Right, let look back right a little bit. All right, so at so right here, 9:28, right before 9:30. So we look at the charts on a 1 hour, and then and then 15 minutes. We're thinking to ourselves, we say, wow, they have a 3 try right here, 1, 2, 3 try on upside. So it looked like it's gonna be consolidation. It either break down here, it's gonna make basically we saw it's consolidation. So basically it's gonna make another leg up, or it's gonna be, it's all retracement, right? It's gonna be reversal. That is our understanding before the markets, that's our interpretation of the current setup. Okay, then we see, okay, at 9:29, boom. So 9:31 look like because we look the level right there, 56, 36, test from below, break it, reverse, and we look like this gonna be follow up. It's gonna break it down. That's what we saw at that moment, and yeah, that's the moment. And that's how we construct our first trade right there. Let's see, our first trade. Yeah, here's our first trade. Exactly at that moment, you see that at 31st, 9:31 right there, 9:31 right there. So we thought, all right, so it's break, test below, break, and then reverse. That's what we saw. But now we look back, we see that no, it's a second leg up gonna be for this one, because whenever you see a break and reverse back, it's gonna be a second leg up. Even though this one look gonna be a down, but it flipped, and that's exactly it happened.
Yeah.
See that? As soon as we go the short, we flip on it right away. See that? Yeah. Even though right there it gives us some some gain right there. Yeah, $12 gain, $37 gain right there. Oh, yeah, right there. It go into our favor just 50 seconds. $50. The maximum we get is $50 right there, which is 1 point into our favor. But after that, we are out of money. Come back one more time, which I think we should get out of this trade right there when it go to break even. But anyway, it flip on it and boom. So that's our first trade right there. So basically right there we thought it's gonna be second leg down, but it's not. It's, you see the leg right there, 1, 2, and then this is gonna be reverse. It's gonna be second leg up, one leg up, it's gonna be second leg up, because as soon as we see it break and reverse, it's gonna be second leg up. That's how beautiful, and you see that? You flip right away. Boom. Yeah, so if we go long, if we remember our playbook, whenever you see a break and reverse break back right away, then go with this direction, which is another leg up right there. So we kind of misread that moment, and we pay for that. So let's say we should aim for only 5 points, which is 250. 250 right here. So 5 points. Yeah, we get 5 points. Yeah, almost 5 points. If we go in right there at that level of 36 right there. Otherwise, we wait for next candle, we still have more than 5 points. Almost 6 points right there. Yeah. So 40. Yeah, 4 point. Right, 36, 60. It's gonna be. Oh yeah. 4 point. 4.5 right there. And then boom. Looks scary, but boom. It hit the target. 5 point right there. And one more boom. See that? That's the flip right there. Let's see the second trade we take when we saw this setup. Yeah, here the second trade we take advantage of after the first trade, right? After the first trade, we get it wrong. Then after it flip, we go in right away. So at 41, we go in right away on what time? 34. 34 after. Yeah, 33, we go in right away. After we see the flip, we go in. We take advantage of that, we go in. Yes, and we catch, the move right there. If 30 cent move first, 262, 3 contract. So it's about less than 3 point right there, 38 to 40 right there. So it only 3 point for that matter. Right, 38. Yeah, less than 2 point. Yes, so we catch a quick profit right there with 3 contract. Boom, we hit. So we make profit on that trade right there, at trade number 2 right there. So basically we short right here, but we see flip, then we go long. We stay number, right? We go with the flow right there. So it makes sense right here. Now we understand, it's break, reverse, then boom. Break, reverse, then it break it back. So the second leg up right there. That's our playbook right there. And now see the third trade we take. Right, here's the third trade we take it from the idea that you see that. So it break this level. It touch from below and break this level. 56, 37, 50.50, then there's no reason to touch the level. It touch the level in order to break it. That's the reason why we put a sell stop right there at that level. That's our idea. I mean, it may work and it may not work. Sometimes it tap and then it's run away. Other time it retest and then it break it back. So 50% right there, and we got into the trade, put a sell top, and it hit our order right there. And so far it didn't go into our favor at all. Yeah, right here it go into our favor just a little bit. $12, that's the max that it gives us. Yeah, $25, that's it. We just do one contract at that time. And that's this. After that, it didn't give us. After that, we guess we move our stop loss. We said no, we're not gonna reach more than $100. Oh, we get out. It's okay. And he hit our target. We get out, so we hit back $100 right there. So basically, we short too soon. We have to wait until 10. That's our mistake. We have to wait until 10. We learn our lesson right there. Don't short when you see the 9:30 like this. Don't short too soon. Wait until 10, which is about 30 minutes later. Let the market maker collect all the order, and then they will make the move. Don't go early, too early. That's the lesson we learn. Alright, that's trade number 3. And now look at trade number 4. Alright, here's our trade number 4. You see this at 10, right? At 10, and we see this flip. And as soon as we see the flip, we go short right away, which just makes sense. Perfect. We see flip, boom. Alright, we saw that. One more time. Alright, we put in we sell order right there. Boom, we go in. But here's something wrong with the trading view. We got kicked out of the trade. You can see right here. You know, the mistake we make if we put three contract right there. With the 3 contract, we try to do very tight stop loss. But even though tight stop loss we put at 41, but somehow our stop loss got hit. You can see that it never hit 41. The max hit is 40.50, but somehow it just triggered our stop loss. So it's not our fault at all. You see that there? Yeah, it never hit 41. It worked closely. Look, it works slow motion. You see that? Hold on. I think we have a speak verse that was at 50. You can see. Well, now we can see. With 41, how do it hit our stop loss right there? We don't understand. Very strange. Yeah, see that? It just, the maximum is 40.50 right there. How do we have 2 pips above that? Yeah. So if we feel like it's a glitch right there from the platform, it just hit our targets. It's crazy. And we take a loss right there. It's very painful right there. We lost 200 something, which should be a winning trade for us. Yeah, we lost 223 something. I don't understand that. We don't understand that. Somebody glitched something. It just kicked out of the trade. Yeah, that's is the new reality for it right there. But trade number 4 first right there. So basically after that we see this flip, we go in short. You see that right? Yeah, other way we go in at 39, so we're perfect right there. We make a huge profit right there, but it kicked out anyway. Alright, let's see trade number 5. Trade number 5 is very interesting. After trade number 4, we short them, then we try again. Right, at 10, you see that? Try again, we're going at the same that level, 39 right there. We're going short again. And it's going to a favor, but look, you see, we go 35, we go 34.75. It's just 2 pip above our target. And we get a little bit greedy. We try to move our target right there. We should take profit right there, about 200 right there. We should be good right there. But anyway, we learn our lesson. Whenever you see a Dow close big right there, take profits because it can pull back, and we still have a chance to short them again. That's how the algo run right there. And very interesting right there. So we learn our lesson. At least we put it to break even, and they come back, hit break even. We get out of trade and break even. You see that? So trade number 5 is very interesting right there. We have profits to take, but it didn't hit our exactly target. We did move our target also, but that's the mistake we make. If we leave it at 34.50, it did hit 34.50. You see right there, and we move our targets. So and one bond we have profits is 200 something, and we didn't take it. That is our you see right there. Let's see when. Okay, too fast. Yeah, that one we have more than 200 profits, so we should check profits and then wait for it retrace short one more time, because that's how the algo run. You see exactly that happen right here. Yes, and then it pull back, and then boom, it makes the second leg. The next candle could be down because it tests from above, and then boom, it go down. That's how the algo run right there. So we learn our lesson. We feel a little bit hurt right there when it's, obviously we should take profits, and we did not go back even. But anyway, we learn our lesson. Boom. That's trade number 5 right there. All right, let's see if we go with trade number 6. All right, trade number 6 we learned from trade number 5, right? We see that when it pull back right there, it's a tap from above, it's gonna be reversed. You're gonna make another leg down, another down move right there. So we're going. Yeah, we're going right there. But in this time, we just only do 1 contract. The number of trade number 5 we do with 3 contracts, but we only do 1. And you see that beautifully. We add 1 more. 2 right there, and boom, it hit our target. We moved target to 400 something, and it did hit. Boom, beautiful. So we got lucky on that one. It hit the target beautifully. So always wait for this candle form first. The test from above with a long wick, then boom, the next candle gonna down move right there. Vice versa. This is like a hammer candle right there. And this one got a very smooth move. It's called low resistance liquidity run right there, because this is a setup. All the people put the sell order in, boom, then it bring the price down right there. So we have beautiful trade number 6 right there. All right, let's see what do we so far. We see right there. Yes, that's the trade number 6 for us. But we got something to do, so we didn't have, after that trade number 6, we take a break. And let's see what trade number 7 when we come back. All right, here's trade number 7. We make a mistake on trade number 7. We FOMO right here. Basically, we thought, wow, it tests from above, break, reverses, and this one is just a setup to go long, but we missed it because this candle have, in order for this to to go up from here, this candle have to be a hammer like this one. You see, after you see the reverse back, you want to see this candle, and right here, retest them one more time and it work. You don't want to see this one is close, you know, above, below that. For what level? You don't want to see this kind of right there. It's gonna be a follow through right here. It's not gonna reverse from here. If we want to reverse, we have to looking for this type of candle forming right here above a level. So it's a FOMO trade, and we took a hit right here. Yeah, with FOMO, we feel like, wow, we're gonna you know, reverse back with FOMO, and we're going right there, and exactly they trap us right there. So whoever go long like us get trapped right there. So beautifully, the market is really trap anyone who you know, not paying attention. If we pay attention, we're not gonna go in long this guy, because this guy is not. It could be a follow through. It's not gonna reverse, because this guy is not a hammer candle. Exactly, it happened. Look, boom, it take it out. I think we close position, or yeah, we close position right away. We take a loss, but it's small loss instead. Let it hit the. Oh wow. Oh, so we two trade right here. After the loss, we take another trade. Now we say, wow, let's sell it. Yes, sell it. And we put right there. Wow, it's gonna be follow through, right? Let's sell it. Let's see how we handle right here. We do 3 contract. Wow, that's crazy. Oh, now we can see the mistake. We make 2 trade in a row. Wow. Yeah, you do 3 contract. That's why we put a stop loss 2 times. You have to put stop loss up here. Wow, that's the real time. We see how we're thinking, and that real time right there. We should let it go. When we should let the trade run, it's gonna hit this level, 56.33. Let's see if 56.33. I think this is where the follow through. Oh, right here. Yes, 36, 56. 33 hit that level. We should wait for that. It will hit the level right there. Let what the tap right there we could see. Yeah, here's the tap right there. You see. So we thought that we're gonna go long. We make mistake on the trade number. Trade number 7. Then yeah, we number 7, we take a loss on the long, then we switch to short, and we put a target at 36. Let's see right here, we put the target. Let's watch this. Right. And this candle is 11. Candle 11 right there. All right, so we engage in the short after the long. We got it wrong. That's fine. Short fine. That it will go through. Well, let's see what mistake we make right here. Boom. We put the sell off too tight. That's the reason. You know, 56.33, our target, it hit. You see, it hit right there, 56.33. Let's see this candle at 11 right there, hit that. It hit, exactly. So our mistake right here when we do trade number 8. So basically this is calling for 2 trade. Trade number right here, number 7 we go long, and then number 8 we go short, but we stop loss too tight. We make mistake right there. So that's the first mistake we make is we go long. That's the wrong direction. The second, we get the direction right, but we push lots too tight. So very tricky right there. We have to put a note in there so we can learn from our mistake. So this is for trade number 7 and 8. Also a loss. And here's we stop loss too tight. Otherwise, the target will get hit. That's our note right there. So okay, there are 2 trades there. Beautifully. We learned a lesson beautifully. Anyway, we run out of time right now. Let's watch the last trade we take, and we go from there. So here's the last trade we trade right here. We take a little bit, risk right here because we see that it's flipped from there. So we entry for very quick profits. And it did hit our profits targets, and we out right there. If we don't get out, we will be in trouble right there. Boom, it hit our target, we out. So that's our last trade right there. All right. Anyway, we're now out of time. We really thank you for your time and interest. We're always grateful for this opportunity. We do what we love, and success coming our way. Bye for now. Have a great evening. Talk to you later.